healthcare as a percentage of the S&P is now at a 10-year low. And, in that time frame, there's been a tremendous amount of innovation and value that has been created for the entire healthcare ecosystem. And as a result, I think we're seeing a lot of really attractive setups for the 2025 and beyond timeframes.
Hello, you're watching Proactive. I'm joined by Westfield Capital Management Managing Partner, Matthew Rena. Matt, great to speak with you. We haven't spoken before, so could you start by telling us about the Harbour Healthcare UCITS ETF and its objectives?
Sure. First off, thanks for having me. Excited to talk about the opportunity for healthcare investing and specifically in the healthcare fund here at Westfield. It's an actively managed ETF. We try to be pretty active, but also pretty concentrated in the bets that we're taking. The idea behind the actively managed ETF was to find a vehicle where you could capitalize on all of the unique Westfield healthcare ideas across the entire market cap spectrum, and also to get exposure to both ends of the spectrum in healthcare. So on the one end, you've got sort of the higher quality secular growth companies, the kind of more traditional GARP type names that we believe have really attractive secular backdrops and potential for real revenue and earnings growth over the long run. And then on the other end is sort of more of the higher growth, higher innovation side of healthcare. So that encompasses a lot of names in the biotech space and also the high growth med tech space. So we tend to have roughly 40 names or so, give or take, in the fund. Again, we're pretty active, and you'll see all subsectors of healthcare represented in the portfolio at any given time, and you'll see us tilt in one direction or the other in terms of subsectors based on the opportunity set that we're seeing.
Matt, healthcare has been an unloved sector over the past year or two due to the tech and AI frenzy. You see that changing in 2025?
I do. I think you're right. I mean, I think that's probably been the biggest headwind to healthcare, is just sort of a relative attractiveness for the average generalist investor and big long only fund. It's hard to get excited about something like healthcare when you're chasing these huge stock returns in sort of more thematic areas of the market like tech and AI that you referenced. That sort of confluence of events has led to some pretty attractive valuations in healthcare. As a matter of fact, healthcare as a percentage of the S&P is now at a 10-year low. And, in that time frame, there's been a tremendous amount of innovation and value that has been created for the entire healthcare ecosystem. And as a result, I think we're seeing a lot of really attractive setups for the 2025 and beyond timeframe. So to the extent that, some of these more high growth thematic areas of the market, tech, AI, data centers, to the extent that those start to fizzle out, I think you'll see a lot of return of capital to the healthcare sector. And that's sort of coming at a time where valuations are really attractive. So I do think that healthcare has a really strong chance of outperforming the market, and it's a really good time to take a fresh look at the opportunity set.
Where are you seeing the opportunity set, Matt, and which subsectors in healthcare?
Yeah, so if you look at the composition of the fund, I would say we're most excited about the opportunity set in biotech and in med tech. And in biotech, it's interesting. We've basically been in a 4-year bear market for a space that is probably one of the most innovative sectors in the market. So you have a lot of companies that have just made a tremendous amount of progress in the clinic, really de-risked assets. A lot of these companies have multiple assets that have been entirely de-risked in the clinic and are now starting to launch their products. That is a really exciting area to us. Within that sort of bucket, you've got kind of the more established, large cap thematic areas like obesity. So we're invested in Eli Lilly further up market cap. And then in the mid cap space and below, we're seeing a lot of really attractive opportunities in the rare disease space, something that we've been historically pretty active in. And then on the med tech side, you'll see, a lot of exposure to what we view to be some of the highest quality, highest growth areas of of that subsector. So medtech in general is pretty insulated from a lot of the concerns that people have had about healthcare broadly. Generally speaking, you have to have the best mousetrap. So we're looking at really innovative technologies that are addressing an unmet need that are really tough to compete with. And so as long as these technologies add value to all of the stakeholders within healthcare, so patients, payers, and providers, and as long as they have this really large sort of what we call TAM or total addressable market, and we can see the revenue and earnings trajectory over time, we will pay up for those assets. And that's whole space in general is sort of benefiting from this secular utilization trend over the last few years coming out of COVID.
Can you tell us about some of the stocks that you've perhaps identified or have already been adding to your portfolio?
Yeah, sure. So I mentioned a few names. So obesity, in our view, the best way to play the obesity trend has been through one of the two large cap players in the space. I think this is going to be kind of a winner takes all market. And it's going to be very tough for some of these smaller competitors to break into the space. There's a huge amount of capital that needs to be invested to scale up manufacturing. And so we've expressed that bet through Eli Lilly. It's one of the bigger positions in the fund. This is a large cap company that will double earnings over the next couple of years and then double them over the next few years after that. And so that's really tough to find further up market cap. And we do feel as though they've got the best molecules to address obesity. And then in the rare disease space, we're really excited about Ascendis Pharma. So Ascendis Pharma has two products that are currently on the market for rare disease. We think that those two products alone have the potential to generate 4 to 5 billion in revenue, which will translate to some pretty significant earnings leverage. The company's about to flip into profitability at the end of this year, and we have them going from being a money-losing company to earnings upwards of $40 to $50 a share over the long term. They also have a third product, which just generated really compelling data this fall and will be filed this quarter. So a lot to like about something like Ascendis. We're also involved in Legend Pharmaceuticals. So this is essentially a functional cure for multiple myeloma. This is a cellular therapy company. They're partnered with Johnson & Johnson. This is also about to flip into profitability towards the end of this year. And this is a company that has a product that probably will never be genericized. It's very, very complex. So if you think about the value of those cash flows over the next decade, it's probably multiples of their current market cap position. And then on the device side, I would say, we're pretty excited about Dexcom, which is a name that we've owned for a long time and have had it at various sizes depending upon the risk reward. But this is the dominant player in the diabetes space, the continuous glucose monitoring space. Best mousetrap, again, huge sort of market opportunity and really high margins. So I think that one will generate a decent return for us from here.
Lots of stocks to ponder over, Matt. I'm sure this is the first of many conversations we're going to be having. Thank you very much for your time today.
You bet. Thank you for having me.
That's Westfield Capital Management Managing Partner Matthew Renner.